Good morning, guys. How we doing? I'm Ryan Mack. Welcome back to Trading, guys. And you know what day it is. Today is Fundamental Review Day. We do the same thing every single week because that's all trading is, right? It's finding that strategy that works and building that consistent habit. Don't change anything unless you get a golden nugget you want to add to it. But once you get that strategy that works, just crack on with it. Every single week, excuse me, we are doing reviews on fundamentals to see where it's going. Now, this is pretty much say this is the 14th of December. There's probably not going to be much that's probably let me start again. That's probably me done now, trading until about the second or third week in January. Because as you know, if you've been in the markets for a long time, this time of year right now is really shit. I will look out for more trades this week in a last bid attempt. However, if there's nothing there, I'm not going to force something which isn't there. Okay, so as always, guys, get your notebook out, right at the top, trades or this week's trades or this week's fundamentals, whatever you want, right? Below that, you want to write strong, weak, and then neutral. Okay? If this is the first time you're watching my video, I know you're going to say, well, that doesn't make sense. Why isn't it strong, neutral, and then weak? The reason why we do it strong, weak, and neutral is because at the end of assessing each economy, we list an economy as being strong, weak, or neutral. At the end of it, whatever economy is in the neutral section, we ignore. Whichever economies are in the strong and weak section, that's the ones that we trade. Because it gives you that big divergence, which is going to give you a trend, right? If you trade strong against strong, you're just going to get a range. If you trade weak against weak, you're going to get a range. If you trade weak against neutral, you're going to get a slight, trend, but it's going to be really shit. So if you get the bigger the divergence, the better the moves, essentially, okay? That's just a really cheap way of saying it. A really simple way of saying it, I should say. There is a lot more to it in the background than that, all right, but I'm just trying to keep things simple. So when I go through these, I go through them one by one, except from AUD, China, and NZD. The reason for that is because they're all very closely correlated, okay? When China is doing well, Aussie and New Zealand do well. When China is doing bad, Aussie does bad, okay? It's because they do so much business together. If Chinese manufacturing is going up, where did they buy all their produce from? Where did they buy all their iron ore, their tin, their nickel, their copper, their gold, their silver, everything else? They buy it from Australia. So if manufacturing is flying in China, it means business in Australia will also be flying because China purchases all the shit from them, okay? If manufacturing and all this other stuff is down in China, it also means that Australia is down because they don't get, that massive volume of business. Of course, it's not the only country they deal with, but it's literally 80% of the business, right, that comes from China. So what we always do is we look at the last week and then we look at next week, okay? So let's have a quick look. Building consensus month on month. Down. So for New Zealand, it's really a dairy, right? Their main money comes from dairy, milk, lamb, beef, blah, 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 and tourism. That's why it's pretty shit. NZD, building consensus month on month, massively down. That's not good. Inflation gauge month on month is slightly lower. Retail sales month on month is slightly up. Do we expect that? Yes, of course we do. Why? Because it's Christmas, okay? ANZ job advertisements is down, which is weird because normally you get more work at Christmas, right? You get Christmas jobs. Building approvals month on month is down. That's not good. So when you look at this, you're going to see that it's green, right? And you're going to think, oh, that must be good because it's green. No, don't look at the color and think that means it's good. The reason why, if you look previously, it was 5.8. It's dropped to 4.2, so it's dropped, right? So why is it green then? Well, it's green because they anticipated it, i.e. they forecasted it to be 1.2%. and it's came in higher than they forecasted at 4.2%. So what I think Forex Factory does wrong is they highlight this as being green. And if you don't know what you're talking about or how to interpret these numbers, you're just going to look at the column and go, oh, that must mean good. That must mean bad, which is not always the case. Sometimes when it's red, it's good. Sometimes when it's green, it's bad. Okay. So the way to look at it is look at the previous 5.8. Is it up or down? It's down. So that's bad, right? Company operating profits. They're up slightly, but obviously still shit because it's minus -4. It's previously -6. Cakes and manufacturing PMI is increasing for China. Now that's fantastic. Of course, remember anything above 50 is bullish, right? Even if this changed from 51 down to 50.3, that would still be bullish, guys. Even though it's dropped because it's still above 50, right? Anything below 50, i.e. 49.9 downwards, means bearish for that particular country / economy. Okay. Cakes and manufacturing PMI is bullish and it's growing from the previous, but that's kind of to be expected because it's Christmas, right? If people are buying more shit, China are going to produce more shit. It's really as simple as that, okay? Commodity prices year on year, dog shit have dropped. Overseas trade index, slightly better. Current account, slightly better, but it's still poor, but slightly better. GDP index, price index, sorry, 1.2, not good. Commodity prices, good. GDP quarter on quarter is up, but lower than anticipated, but it is up, right? This is another example of me saying red can also mean good. Look, previously it was 0.2, so it has increased. The GDP has increased by 0.1. It's only highlighted red because it was forecast to come in at 0.5. It's came in lower than they forecasted it, and therefore Forex Factory shows it as being red, which is pretty bullshit, because if you don't understand how to interpret this information, you're going to think that that's bad, okay? And it's not bad. Cake and services PMI is slightly decreased, but it's still good. See, that's red, but it's good. Why is it good? Because it's still above 50, which means bullish. Now, when it's above 50 and it's dropped slightly, it just means things are slowing down a little bit, okay? But it doesn't mean it's bullish. It doesn't mean it's bearish. It's still bullish, okay? Good trades balance is up for Australia, so that's good. So they're in what's called a surplus. When the goods trades balance is up, it means that a country is exporting more than they are importing. What's the cause of that? Boom, 51.5 and 51.5. Okay. So as I said, when China does well, Aussie does well. Okay. But overall, Aussie's looking pretty shit. What did I have it marked down as last week? Let's have a look. Yeah, I had it as weak last week, yeah, because it is weak as shit. You don't just change pairs, week to week. Sometimes you're like, oh, now it needs to change. But just because you get good news one week and good news the next, you don't just jump from, week to strong, or whatever. There's always a gradual change, right? If you start to see week, and it keeps coming in week after week, then of course you're going to change it, right? Or strong. Then you'll be like, okay, this is now in an uptrend, right? You don't just change it because one number's bad, one number's good. You need to look at the overall big picture as a whole, all right? Sometimes, if you smash this kind of stuff out for, I don't know, a month to 8 weeks max, you will be on the ball with this. I'm telling you, it's not hard. If you put in the work, you could be all over this stuff in the space of 4 weeks. I swear to God, right? You just need to put in the work. And a lot of people don't use fundamentals because it's a lot of fucking work, right? And people don't want to work. People want this easy money, which doesn't exist. They want this easy money from drawing stupid fucking lines on your page and, risking your money because a candle broke your line. It's fucking stupid, all right? So, what have we got here? Like, obviously, NZD is weak as piss. They may as well trade in chocolate fucking buttons because their currency is pump. NZD, AUD, let's have a quick glance. It's not that good. I'm going to keep AUD at weak. I mean, we could argue the case that it might be neutral. It's a bit wishy-washy, and it is wishy-washy. It's a bit kind of mixed data, right? There's some good, some bad. I'm just going to keep it at weak for now, okay? I don't see it getting into the becoming strong for now. Definitely not. Obviously, the Chinese yuan renminbi, we don't mark up because we don't trade it, okay? Now we jump on to 1 by 1, and this is normally much faster, okay? Oh, sorry. Pardon me. Let me just jump back. I made a small mistake there by not checking next week. Here we go. Hold on. Oh, shit. Fuck my life. I'm going to have to go through this again quickly because that was the week before. My bad, guys. Sorry. I don't know why Forex Factory came up that way. So it's this week. It should be on. My bad. Give me 2 seconds. CPI year on year for China is down. PPI year on year is up slightly. USD denominated trade balance is up. Trade balance is up. Cash rate, so they haven't cut rates. Aussie hasn't cut rates. It's the same. Manufacturing sales into the shit. Let me just check. Employment change is up for Oz, so that's quite decent. Unemployment rate is down, so that's good. Again, this is because of Christmas, right? You always get a lot of these temporary jobs at Christmas. NZD, but not good. Visitor arrivals, not good. Money supply, not good. Not good. Yeah, so I'm going to keep... Personally, I'm going to keep Oz and NZD at week, okay? We've seen better employment numbers, but yeah, that's not enough to say the whole economy is great because it's just shitty little Christmas jobs. They'll all be binned in January, Let's have a look next week. We got FPI, flash manufacturing. We want to see that. Flash services. Yep. So this will decide, if anything's going to change. Home prices, industrial. We've got, pardon me. We've got a fair bit of news next week. Nothing, nothing too crazy, but we've got a fair bit of news that we want to see next week. Let's have a look. Now we go 1 by 1, right? Canada. We want to see last week. So Canada cut rates by 50 base points, okay? Building permits, 3 point minus. Oh, that's terrible. Capacity utilization rate, that's positive, negative. So that's what we'd call mixed data, okay? Now, why when a country cuts its rates is it kind of seen as, as bearish, okay? It's because the lower a country's rates are, right, it means the less profit an investor is going to make by buying that country's bonds, okay? So let's say you previously had bought tons of Canadian bonds, right, when the rate was 3.75. They've now cut your yield, okay? They've now cut your potential for reward from 3.75% return to 3.25% return. Yet, if you take your money out of the Canadian dollar and you invest it in New Zealand, Oz, USD, or GBP, you're going to get 4.75, 4.35, 4.25. So you're going to get a far greater return if you invest in the British economy or the American economy or the Aussie economy than what you are in the Canadian economy. So when they cut rates, what tends to happen is any of the big players in the world who has, been, had billions or hundreds of millions or billions invested in Canadian bonds, they'll quickly sell those bonds and then purchase, USD bonds or British bonds and blah, blah, blah. Now, when it comes to buying bonds, an investor must purchase the bonds in the currency of the country in which he wants to invest in. So if you want to buy British bonds, you need to buy them using British pounds. So if you've got billions of dollars or billions of whatever, and you want to buy British bonds, you can't buy billions of euros worth of British bonds. You need to convert your billions of euros into British pound and then buy the bonds, the British bonds, using British pounds. Now, when that happens, what it does is it creates a massive weakness in whatever currency you're selling. So let's say you're cashing in on your Canadian bonds, right? And you're dumping the Canadian dollar. It creates a massive supply of Canadian dollar, which then makes the currency weak because there's a massive supply of it. When you're then changing those Canadian dollars for, let's just say, British pound, it creates a massive demand for the British pound, and therefore the pound becomes strong, and it'll go up against weaker currencies. So that's how the bond markets affect Forex, and that's why we care about if these interest rates are going up or if they're coming down. Okay, so I hope that explains it. If you're an everyday person like you and I, and you're living in the UK or the US or Aussie, whatever, it's not nice that inflation is this high. It's not good, because if you want to go out and have a meal with your family, drinks with your mates, go to the cinema, ride on a train, buy petrol for your car, buy groceries, everything's going to be fucking expensive, right? And you're going to be like, oh my God, how can I afford to live? Okay, that's what creates that kind of mindset. However, in terms of trading, the higher the central bank rates, the higher the inflation rate, is actually really good. It's really good for the country as a whole, because it invites more investors, because if the investor invests in it, they're going to get a greater yield. Okay, they're going to get a better return on their money. So that's why high central bank rates, high inflation is good for the country, but it's not good for the people. Okay. Sorry if that was long-winded, but I just like to explain everything clearly so that you guys understand it. Next week, what have we got, guys? CPI, but it's only month on month. Yeah, we've got CPI next week, year on year. Okay, so yeah, we've got retail sales. Yeah, so we do want to see this. Okay, this next week is a big week for Canadian dollar. I would say, I think I had it as going strong because they got some really good numbers. Yeah, I did. Last week I had it as strong. Well, the numbers are going up here. Okay, so I'm going to keep it that way. They've cut rates, but I'm going to keep it in the strong category. I'm just going to keep it in my mind. It's not a rock solid, powerhouse, but I would put it into the strong category for now. It may change once we see next week's numbers. Okay. I mean, you could argue that it may just be neutral, but yeah, I'm not going to go down that rabbit hole. Last week. Sorry. Wrong. This week. CHF is always a shit one to. They cut rates. They cut rates by 50 basis points. Hence, you got these kind of little mild melts and stuff, right? However, the Swiss franc is always like safe. Look, the inflation's never high. It's like 0.50, and then they'll take it back up to 2%, 1%. 1.5, 1.75, 2%, and they'll just bring it back down. It never really gets above the whole 2%. They're very good at keeping it. And central banks don't want to really get inflation above 2%. They want to try and keep it 2%, bring it back down, up to 2%, bring it back down, because it's easy to manage, okay? When it gets to like 4.75, 4.75, 4.35, it's harder to manage. There's more likelihood of like crashes being much sorer on the economy, okay? So that's why I like to keep it that way. Yeah, I always just put CHF in neutral, to be fair. It will be stronger, of course, against shitter economies, right? But I always just put it in neutral. The way to trade CHF pairs is if something kicks off. It's really a risk-off sentiment, in my opinion. If a war kicks off and America's heavily involved, people will remove their money from the USD initially, and they'll put it into gold. They'll put it into Japanese yen, NZD, and CHF. Okay, these are risk off. These are safe haven currencies. All right. People will say to you, "Oh, when gold flies, USD melts." And when gold melts, USD flies. That's actually not the case. It's not because if you look over the last year, USD's been flying and gold's been flying at the same time, right? So then that logic of USD being strong means gold is weak and vice versa is bullshit. The reason why you will notice at times when USD gets weak and gold flies, it's nothing to do with one being weak and one flying. It's to do with the sentiment, risk on sentiment, or the markets have just been switched to risk off sentiment. That's a whole different fucking lesson, right? But that's the reason why markets are like 98% of the time risk on. Okay, we can make money. People are willing to take risk 98% of the time. Markets then switch to risk off when something unforeseen happens. Fucking tornadoes hitting America, wars kicking off in the Middle East that potentially America could get involved in, and blah blah blah. Everyone's like, "Fuck, what the fuck's going to happen here?" So they'll take their money out of the US and they'll bank it to gold quickly, and then a week later, when it's like, okay, either the war has stopped and it's been negotiated, or it will just continue like Russia and Ukraine, and it becomes the new normal, right? In that case, they'll just move their money out of gold again, put it back into the USD, okay? Or move their money back out of CHF and USD, back out of NZD, back out of Japanese yen, and put it back into USD or GBP, blah blah blah. All right, that's why that happens. It's nothing to do with USD strong, so gold melts. That's bollocks. So what have we got? Let's see. Euro has been dog shit recently, guys. And obviously, all the drama going on in France, they are woke to fuck. Le woke. And it's just completely fucking their country. They've just got jihadis fucking everywhere. Same as the UK and Germany and Sweden now. They're all third world shitholes because of all the illegal jihadis that have came across the fucking border. German final CPI month on month. Italian industrial production. We don't really care about Italy and Spain. We just really want to see France and Germany. Main refinancing rate, monetary policy, German trade balance, shit. Well, that's slightly better, but it's still shit. Okay. Look at all these numbers. Look, bearish. Even forecasted bearish, because it's below 50, right? Shit, bearish. It should be bullish if it goes up, but it was just one fucking thing. Bearish. It's all shit. So I'm gonna put euro in weak because it is shit. Moving on. See, it's quite fast. Once you get past the first one, because we do 3 at one time, it's quite fast. GBP, it has been good, but it has some bad numbers recently. Let's just see. Rick's house price balance is up, so that's positive. Negative, bearish, bullish, sticky. It hasn't changed. Consumer confidence is down slightly. No, it's up slightly, sorry, because it's minus, right? So it's the opposite way, yeah. It's up slightly. GDP month on month, same, sticky, so bearish. That's bad. Bearish, that's bad. Same, but still bad, because they thought it would be more and it's not. Bearish. Fucking hell, pound, this is some bad news. Now, when you get weeks like this and it's really fucking bad, it doesn't necessarily mean that pound is just going to instantly jump to weakness, okay? In this occasion, I am going to kind of mark it down as being potentially weak because I think they had bad news last week as well. Let me just double check that. Good. Bearish. Bullish. Okay, let me just check another week back to paint that picture, right? Bullish. It's mixed data, guys. It's mixed, but I would say it is now more. It is now more to the weak side. Let's see what we've got coming up next week. Do we have CPI? CPI is the big one. Right, we really need to see CPI. We want to see PPI and CPI. Okay, they're the two ones that we really want to focus on, and we want to see these. So yeah, potentially we have had a week of weakness, all right, I'm still going to put pound in strong for now. I'm going to give it the benefit of the doubt because the economy as a whole is doing pretty well. A lot of these numbers are forecasted to be doing better. On top of that, we're in December, where retail sales and credit card payments and blah, blah, blah should all be going up. Employment should be going up because with Christmas jobs. Unemployment should be coming down because more people are taking Christmas jobs, right? So when we think about the big picture, this is potentially going to be a decent week for the pound. Excuse me. So I'm going to keep it in strong for now. If these numbers come in weak, then yes, certainly I will then be moving to the weak category, okay? But for now, pound and Canadian dollar, I'm going to put in strong. Let's see. Bank lending year on year is up. So, yeah, the Bank of Japan have made it very easy for people to borrow money now, right? In an attempt to try and grow the economy. If people can borrow money very easily, they're going to spend money and buy a lot more shit, right? If they buy more shit, it stimulates the economy and things, come up. It means the currency and economy will come up, blah, blah, blah. So that's how like governments and central banks intervene to try and help their economies because the Japanese economy as a whole is pretty shit right now. Bank lending is up, okay. Bullish, bullish, bearish, bullish, only ever slightly. Bearish, sticky, bearish, bullish, bullish. Bullish, bearish, bearish. So it's very mixed data. I'm still keeping Japanese yen as weak, guys, because the economy as a whole is weak. It's fucking wank. Okay. They may as well trade in fucking ramen noodles. Their economy's that shit. Core machinery orders month on month. Excuse me. You want to see that? Flash manufacturing, yeah. So when it comes to services and manufacturing, Japan is a manufacturing country, so we really want to see manufacturing numbers good, right? If we see both services and manufacturing good, then fantastic, but we don't really care if services aren't good because it's not really a services country, it's predominantly a manufacturing country, right? Trade balance, we want to see that. So if it's negative in a deficit, it means a country is importing more than they are exporting, which means they are spending more than they are making, essentially, right? If you want to look at it that way, which is not good. And if they're in a surplus, i.e., not a minus, a plus, then it's the opposite way around. They are exporting more than they are importing, which means they're making money. All right. Bank of Japan policy rate, yeah, they keep talking about increasing the rates, but their economy's too shit to increase rates. If they increase rates now when everything else is still very poor, then they're just going to fuck their economy, right? They're going to make it unlivable in Japan for their people, which is people are just going to stay at home and then not spend any money because they're going to be like, fuck, my bills are too expensive. I can't afford to go out and spend. And therefore, the economy doesn't get stimulated. Therefore, everything fucking shrinks because everything's too expensive, right? So that's how it kind of works. Monetary policy statement, BOG press conference, national core CPI year on year. It's wank, okay? Moving on. Oh, the last one, guys. This has been quite a quick video. Normally my videos last about 45 minutes to an hour, but I'm just trying to smash this out because I know we've all got things to do. I'm chilling for a cigar. Final wholesale inventories. Let's have a look. USD sticky, bullish, sticky, lower than anticipated, or lower than forecast, sorry. Revised unit labour cost, bearish, sticky, bullish, bullish, bullish. Don't be fooled by this. It's not that there's now a new massive demand. Production has been lessened. There's a lot of rigs on standby right now, so there's less production. So when people are buying up whatever is there, it looks like there's a big demand and there's not. Okay, they're just buying up the limited amount that's there. So it makes it look as if it's bullish. It makes it look as if there's more demand than there is supply, but it's not. It's just people are now buying the very small supply which has been put out to the market. Okay, so it's they're kind of faking these numbers here, if you like. They're manipulating these numbers in a way. All right. 10-year bond auction, bearish, 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 bullish, Bearish. Very mixed data here. Yeah. Import prices. Very mixed data. However, the USD as a whole is a powerhouse. We've got Trump next year. Whether you like him or not, doesn't fucking matter. Markets are going to be fucking brilliant next year. As soon as he's in, all right. Doesn't matter if you fucking hate him. Who cares? It's about making money, right? He's not your fucking friend. USD will be a powerhouse. So you will get pullbacks. So what will happen is early next year you might see these pullbacks and everybody will start saying, oh, look, the markets are collapsing because of Trump. You know, all these fucking Trump haters. They're not pulling back at all. When they pull back like that, it's because the big institutions know this is going to be a fucking mega year for trading. So what they do is, instead of buying stuff that's way overpriced, way overvalued, they cash in, they fucking take chunks and chunks of profits. Markets will melt quickly. Everybody will shit their pants. It doesn't understand how markets work. They'll enter sells on everything. All the institutions will enter buys from areas of value. Markets will fucking fly, and all your stop losses will get hit, and you will become their liquidity for the big institutions. That's how it fucking works, guys. So when markets start to melt, they're not melting. They are simply retracing, okay? Please don't forget that. It's a massive difference, okay? Come on, let's see what we've got next week. So we are anticipating bearish, bullish, 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 bullish. Bullish. Oh, potentially a rate cut next week, and that would tie up because last week's numbers weren't very good. Okay, so let's see if we're going to get a rate cut. I would probably say if we do get a rate cut, this is going to be probably the last rate cut we see, and after that it will start flying again. So you can't cut rates when everything's going great, right? So before Trump gets in, they're probably going to try and cut the rates, the one last time before Trump gets in, because markets are going to be fucking brilliant and rates are going to end up going back up again, guys. Okay, so you can bookmark this that I said it and see if I was talking shit or not later. GDP quarter on quarter 2.8. Unemployment claims, yeah, we expect that to be less, right? Because you get Christmas jobs. It's basically, the point is there's lots of fucking news next week that we want to see, right? Yes, the USD had a mixed data last week, but it by no means makes it weak. Okay, it's still, in my opinion, a strong economy. So just to wrap up, we have got CAD, strong, CAD, GBP, USD. Weak, NZD, AUD, Euro, and Japan. Neutral, Swiss franc, CHF. Okay. Let's have a look at last week's trades, guys. I fucking missed 2 trades that I had lined up for last week, and I'm absolutely gutted because actually this month my managed account is down minus 0.3%, which I know is fuck all, right? I can easily make that back because I'm a swing trader and my risk is always small. My returns are always bigger, right, when we get them in. But I'm more of a long-term trader, so we really need to wait. We wait a long time to get my trades, right? But the same thing happens when we're in one of my trades where we hold the fucking thing for a very long time, right? So it makes the difference up. This is what I had. Look. Wait, sorry. This is actually wrong. I actually had... this is a different markup. Wait, I just close that. So I had this down here. This was a different lesson. I actually had this candle here marked up. And I had this marked right here. And you can see, look, that was my limit order, right? And the market came down. Obviously, I was already in bed at this point. I anticipated to come down, retest this zone. And it just, look, it missed my limit order by a fucking millimeter. And then it flew and I fucking missed it. By the time I saw it, the market was already here. And obviously, you're in an area of rejection here. So you don't want to be trading that, right? You want to wait for a pullback, retested this zone here, and then go, which we just didn't get it. Okay, so I fucking missed that trade. I mean, you're always going to miss trades, but it is a pain in the arse, right? Because I wait a long time for my trades. I mean, look, that was what, 720 fucking pips. Yes, it does annoy me, but, there's nothing you can do. Same again on CAD. Look, again, I had this fucking marked up. I didn't have a limit order here. I just had my entry fucking marked here. But I missed it when I woke up. This candle here was already up here, you know, and then when it pulled back, I just thought, oh fuck, I thought it had just rejected, you know, this zone here. I thought it came up, rejected this zone, and I thought it was then just gonna fucking melt, and obviously it flew. Like, oh, you bastard. So that's why I missed that. And again, look, I'm fucking snapped. I missed another 536 pips. Okay, fuck my life. That would have been, you know, over what, 1,300 pips I would have caught. The account would have been up about fucking 4, maybe even more than 4% just from 2 trades alone, right? Which pissed me off. But these are the markets, guys, all right? You're always going to miss fucking trades. Anything else that I've missed, like, or anything else that I took? I did take GBP USD. Let's have a look. I took this. I closed it around here. It was just a quick day trade. I took it on the 4 hour actually, and what happened was, look, it kept bouncing around. As soon as this went to wick back, I just closed it out and away it went. It's not a trade that I really liked. I really wanted the buys on the higher time frame, but for buys, I need it to come back down here. So in my opinion, I took the counter trend trade. Yes, it broke the 200 EMA here, and that's exactly what you're looking for. You know, up, retest, reject, and go. Retest here, and I would really be looking for buys because the USD economy was/is doing better than the British economy. Okay, so then you're really looking for buys in that case. But I did catch this. Not much. I only caught 40 pips and then I closed out. But yeah, that is what it is. Good. At least we caught a trade, right? It doesn't really look. Let's just go back up. It doesn't look like there's going to be much now until we can see. Look, here it is again. Boom, boom. You know, until into January, guys. Markets are always totally shit this time of year. I swear to God, if you've been in the markets a long time, they are wank. You just get this, right? You see this here? You just get all this bullshit during Christmas. It's fucking horrible. So there's no point. You know, just go away and leave it. What's happening here? Let's have a look. Oh, look, this is broke above, came back for the retest, broke above, back for the retest, away it goes. So I may catch this on Monday up to here. What have we got? Is it even worth taking? Let's just see. 168 pips. I might grab it. It's better than a kick in the balls, right? So look, we already anticipate this. Break above, come back for the retest, and go. What has it done? It's broke above, it's came back for the retest, and now it's going, right? Shite. Euro GPY. Shite. You really want the... yeah, it's a hard one because both economies are wank. This one came in, but again, both economies are shit. They're both weak economies. It's just ranging. But again, look, that's a decent trade. I had it marked up. I had it marked up to retest this zone. Look, it's retested this zone, and now, what's that? Another 349 fucking pips. That's decent. I've done that one. Pound CHF, not touching it. I didn't touch any yen pairs. Didn't get the retest on that. I took that. We did catch that one. NZD USD. That is sells all day long. So you're either waiting for the retest to come up, really retest this zone here and then melt. This zone here, worst case scenario. This zone here, best case scenario. If that doesn't happen, what you need to happen is it has to break below here. Boom. Come back, retest, and then melt. And then, you know, this. We'll take it out of that. This will be your entry, you know, right here when it retests this zone. Okay. I'll just change it to red for sales. Okay, there we go. NZD cat, same again. Look, and it's exactly done that. Look, boom, broke away, came back for the retest and melted, but it's just really shit. You know, you don't have to take every trade that comes. That is dog shit. You know, I mean, you're going to get high. So if you waited for the candle close, you're going to enter around about here. You know, 78 pips. It's not worth it. Boring. And you're, oh look, this is already, look, breaks through, comes back for the retest, and then melts. So we're already getting half of that. We've already got the breakthrough, back for the retest, reject on here, and then melt. So we might be able to take that because the Swiss franc isn't doing too well either, but it is better than New Zealand, to be fair. So let's see. USD CAD, we need the retest here. What it might do is, let's just see. It may test this zone right here. Okay. So we are waiting for this or this. All right. but it's buys all day long. So, I mean, this has been great since the word go. Look, fucking boom, 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 boom. It's still going. So we need this to break above higher, then come back for the retest, and then go, right? Or I would like to see it. It'd be even better. Fuck off. It'd be even better if it comes down and retest this zone, and then we enter, and then it goes. That would be fantastic, all right. But we need to wait and see that. But again, look, I'm not holding out. It's mid-December now. Markets are shit, so I might just wait until January. Okay, there's no rush here. Because remember, with my method, you only need... Look, what was that? What the fuck was that there? USD Japanese yen again. Look, came in. Boom. This one. Boom, boom. Away it goes. Bang on his own. Small candle, large engulfing. But I'm not touching any yen pairs just now because of Japanese bank intervention, okay? Oil looks like it's moving right now, but it's not. Look, it's just a range, right? It's dog shit. Oil is definitely sells. We are not looking to buy. Candles are below the 200 EMA, which again tells you just by a quick look that it sells you're looking for until it breaks above the EMA, comes back to retest, and goes. And just because it's going up doesn't. You can trade it, but by taking buys on oil right now, right? When supply is very low and demand is very low and price is very low, what you're doing is by taking buys is you're entering a trade which has the lowest probability of giving you a good return and the highest risk. That's the total opposite of the whole fucking game of trading, right? You want to be taking the highest probabilities of giving you a return with the lowest risk of going against you, right? That's the way you want to do it. So you're taking a high risk, low opportunity trade here by entering buys on oil. Why would you do it? It doesn't fucking make sense. Just sit back, relax, wait for the markets to retest this zone here, and then enter the sales, and away you go. All right. Or, of course, if it breaks above that, crack on. Gold, look, even gold hits the zones. This one here, I was snapped at. I could have caught this, and read it up. I just didn't fucking see it. Gold is not something that I normally trade. Personally, I fucking hate gold. But, you can see it panned out, all right? I think the lads caught that on a scalp. I'm not interested in scalping, guys. It's fucking gay. What have we got here? I really want to see silver push down to here, retest on this 200 EMA, retest on this area here, and then push up, right? It's really what I want to see. Okay, so we've already got this come up here. We've already got come back down, but it's broke that zone. So now I'm gonna tidy this up because there's no need for that to be there. There we go. There we go. So now we're looking for this. If it comes back and retests a small candle, large engulfing right here, happy days. And then we're going to enter a buy and take it up, okay? Copper. I'm in a buy in copper on my mate's small account here. We just got copper loaded up into the PAM account, but it's just not quite ready to trade yet. They're still putting the broker's still putting the contract sizes and all that stuff. And so when it's in, we will be trading copper. It looks quite good. Let's have a look at the bonds. US 10-year. Oh, so some strength there. Strength, pound. Very similar, yeah. Very similar. Japan is melting. US 500. I love these, but we need the pullback before we can enter. See, look, we really want to be, for my method, this is what we want to be waiting for. This, this one move here, or this second move here maximum. All of this, we'd just be ignoring. All of this, we'd just be ignoring. You see, you just really need to wait for, even this, I would be ignoring it. You really want to see this and this. So with my method, you need to wait for those to pan out, right? So if this comes down, retests and rejects here, that would be absolutely fantastic. Or, even here. Or in fact, what I would say is probably here. That would be fantastic. That's probably a good area of value as well. Probably 786. Yes, it is. 786. Fucking lovely jubbly, guys, if we get that back there. I'm going to mark that up. When I put it green, it means that's really my preferred entry. Okay, whenever I put the green line in. If it's a box, it means it can hit there. But if I put the green line in, it means that's where I'm really be looking for my entry, all right? yeah, just wait and see how this one pans out. And that is it, guys. Again, as I said, look, markets are always shit this time of year. We've been really unfortunate, right? That we had about fucking 8 or 9 weeks of really shit markets because it was election, right? US elections. I'm not making excuses here. It's just the way it is because my method is long term, right? So we really need to wait for those fucking setups. And we did get a couple of them, as you can see. I missed two. I missed fucking pound AUD and pound CAD. You know, nothing I can do about it. You're always going to miss trades, but we'll catch the next ones. It's as simple as that. With my method of trading, literally, see if you got two good trades each month. Honestly, you make fucking fortunes because you just let them run and run and run. You know, if I could have caught trades jumping down to the hourly time frame, but you have to ask yourself: would you rather risk, 0.25% or 0.5% of your account to catch 1 hour fucking candle and that's it, or would you risk half or 0.25% to catch 4 weeks of fucking movement? Do you know what I mean? It's a no-brainer. You want to catch 40 pips or do you want to catch fucking 800-900 pips, And to catch that, you just need to wait. So if a trade presents itself next week, I will take it. Don't you worry about that, guys. I will be on it. But if it doesn't, I'm not going to force something which isn't there because it's better to be in a cash strong position. We're only down 0.3% right now. It's fuck all. It's nothing. You could be down 5, 6, 7, 8% right now, and it's actually still fuck all, right? You're only a couple of trades away from smashing that back again. It wouldn't be nice, but my point is it's still nothing, right? But yeah, we're down very slightly. If I get something, I'll take it. If not, I'm not going to force anything. We'll be back in it in the new year, fresh and ready to fucking smash it out, guys. Okay, thanks very much. I'm Ryan Mack. This is the Trading Guys. I hope me doing these weekly reviews, fundamentals, are beneficial for you, and I hope you learn from them. In January, I am going to be doing a 4-week trading masterclass starting the 12th of January, 10 slots only. I'm going to be doing them every 8 weeks. So every second month, I'm going to run them for 4 weeks. It's not every day for 4 weeks. It's every Sunday for 4 weeks, right? Excuse me. I'm going to be taking you through every single piece of trading from literally on the very first video. I'm going to be going through baby shit, okay? From literally what is a lot, what is a pip, what is a spread fee, what is this? How do I even place a trade? Really, it doesn't matter how long we're in the game, just jump on because we will cover more stuff as well. But at least that way, I know that every single person on that course is starting from the bottom foundations all the way up throughout the course, right? And then obviously week 1, we'll get into more stuff. We'll cover fundamentals, we'll cover supply and demand, support resistance. Then we'll cover more on week 3. And then week 4, I'm going to show you how to piece all of that together from first of all, doing fundamentals, either here or on Trading Economics. Then I'm going to teach you how to read, data platforms like this to help you trade in the long term. And then we're going to cover the technical analysis and how do you know when to enter a trade? How do you know when to exit a trade? And blah, 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 percentages to trade, risk to reward, so on and so forth. Okay, the week 4 is going to be everything that we've learned over the previous 3 weeks, how you piece it all together, and how you put that in the markets. And you will be able to trade confidently after that, guys. I'm telling you. Yes, you will need to do a bit more work each week on your own with the fundamentals, but you will be light years ahead of the game. Okay, because it's January and it's the first one, it's just after Christmas, blah blah blah. I'm only charging £159 per person on this. After that first initial one, I'm going to be putting it up to $359 per person per course, okay, which is still a fucking steal, by the way. For everything that you're going to get on this course, I'm going to take you from zero knowledge to being able to trade confidently on your own on this masterclass, okay? We do have about 7 people that have already expressed their interest, so if you want to come on board, please let me go. Drop me a message here or jump across to the Trading Guys Instagram. Drop us a message, or the Trading Guys on Facebook, whatever you want, and drop us a message that you're interested, and I will put your name down because there's only 10 slots and we already have 7 guys who have expressed their interest. Okay, down below here, you will see more links to loads of free shit that I've given away. I've given away a PDF explaining what each of, like, what the CPI mean, PPI, dovish, bearish, hawkish, all these different terms, so that you can print it off, you can have it beside you at the computer, and you can look through it in your own time. Okay. There's something else down there. What the hell is there? I've got loads of free shit down there. I keep forgetting. Oh, I've included my trading rules. Obviously, you don't have to follow them, but at least it gives you a guide. Because I remember back in the day, people would say to me, "What's your trading rules?" And I would be like, "What the fuck is trading rules? Why would you need rules for trading?" You know? And I was really confused. So I've put mine together down there so you can copy them. You can change them however you like, depending on your style of trading, right? I'm never ever saying to you, my way is the highway. You know, there are a million ways to trade, guys. It's based on your emotional and psychological control. Everybody has a different risk. I'm very low risk. My business partner is very high risk. He's like, fuck it, all on red, you know, and I'm like, whoa, you know, I'm a very low risk trader. He's a very high risk trader. Everyone has their own risk tolerance, right? Everyone, he hates swing trades because they're long and boring, and he loves scalping and he's very good at it. I fucking hate scalping and I love swing trades, you know, because for me, scalping is a lot of work, whereas swing trades, I get in the trade and I can just fuck off for the next 4 weeks and I don't have to sit here worrying about the trade, you know. It either hits my stop loss or it hits my take profit. All right. So everyone's different. We all have different personalities, okay? There's a million ways to skin a cat. You choose your way and you implement it best. All right. I'm Ryan Mac. Thank you very much for watching the trading, guys. Much love. Have a great Christmas, great New Year. And just the last one, we used to do a 3-month trial. After December, January, we are no longer doing it. It's just going to be 97 quid a month. All right. Thank you, guys. Merry Christmas. Happy New Year.